For decades, Intel focused on one core product, the processor humming quietly inside your home computer. It was a legacy giant of Silicon Valley, comfortable in a general-purpose PC market that had largely plateaued. When the artificial intelligence market accelerated into a multi-billion-dollar industry, Intel appeared to be sitting on the sidelines, watching a highly lucrative technological shift happen right outside its doors. Wall Street expected modest first-quarter growth. Instead, Intel reported a 7% revenue rise to $13.6 billion, beating expectations by over $1 billion. The market reaction was immediate. Intel's stock price jumped nearly 20%, pushing shares past $79. That surge multiplied a massive government investment negotiated by the Trump administration last summer. Their $8.9 billion stake is now worth nearly $35 billion. But embedded in this blowout earnings report is a strange contradiction. Despite the soaring revenue and the rocketing stock price, Intel actually posted a net loss of $3.7 million for the quarter. That is significantly worse than the $800,000 loss they posted the year prior. Why is Wall Street pouring billions of dollars into a long-suffering company when it is technically bleeding more cash than it was a year ago? That $3.7 million loss represents a deliberate, aggressive capital expenditure. Intel CEO Lip-Bu Tan is spending that cash to ramp up Intel's foundry business, manufacturing chips designed by other companies. To understand the logic behind this spending, we have to look at the market leader. Taiwan Semiconductor Manufacturing Company, or TSMC, is currently overwhelmed by a flood of orders for new AI hardware. Because TSMC is operating at full capacity, the rest of the tech industry is facing a massive bottleneck. Desperate companies have no choice but to find a new, highly advanced forge to physically build their products. Intel's gamble to become that alternative forge is already winning converts. Elon Musk recently announced that Tesla plans to use Intel's advanced production process to fill their growing need for chips. By capturing this industry-wide overflow, revenue for Intel's foundry business rose 16% to $5.4 billion. The $3.7 million net loss is the price of an infrastructural upgrade. Intel is building the net required to catch the industry's multi-billion-dollar manufacturing spillover. While Intel builds hardware for others, they are also adapting their own chip design business. Selling processors for personal computers is still their largest division, but it grew just 1% to $7.7 billion. Intel faces another hurdle in the AI sector itself. NVIDIA currently dominates the market for heavy-duty AI training equipment, reaping the bulk of data center spending. This visual breakdown splits the AI market into two distinct pillars. While NVIDIA dominates the training side, Intel is expanding its footprint in inferencing. Inferencing handles the everyday calculations of AI workloads. Intel's existing chips are well suited for this, giving them a backdoor into a rapidly growing segment. Looking at this inferencing pillar, we can see the direct financial impact. Revenue in Intel's data center group leaped by 22% from a year earlier, hitting $5.1 billion. Intel does not need to defeat NVIDIA head-to-head in AI training to succeed. By providing the chips for the inferencing side of the equation, they have secured a highly profitable slice of the boom. Intel now operates as a dual-threat entity, a specialized designer for AI inferencing, and the premier backup manufacturer for the entire tech industry. According to the company, customer demand is still vastly exceeding their current chip supplies. This early success suggests a steady, long-term trajectory rather than a temporary fluke. Which brings us back to the numbers that shocked Wall Street. $13.6 billion in revenue, achieved alongside a $3.7 million net loss. In the modern AI economy, the ultimate financial advantage doesn't always belong to the firm selling the fastest pickaxes. Instead, real power lies with the company willing to spend whatever it takes to own the biggest forge.